Hello everyone. Let's take a look at this year's first half performance for the multi-strategy portfolio that we teach. We will first look at a market state based on the S&P 500 performance. Then we will look at the individual strategies' performance given this market backdrop. Finally, we will look at how the various strategies work together to deliver the overall portfolio performance. The market state for the first half of 2021 can be broadly classified as a smooth upward trending market, with each minor correction quickly corrected for the S&P 500 to make new highs. This kind of market state is generally friendly for pure long equity strategies and strategies that short volatility. Strategies that include other asset classes like bonds and commodities typically tends to lag behind S&P 500 as these asset classes tend to underperform stocks. Our two asset risk parity model maintained a generally high allocation of between 70 to 80% to US Treasuries throughout the first half of 2021. US Treasuries sold off in Q1, thereby dragging down performance. It was only in Q2 when US Treasuries stabilized that the risk parity model was able to claw back into positive territory. Our trend model started the year with a leveraged exposure to stocks and maintained this level of exposure throughout. Therefore, as expected, our trend model performed in line with the Dow Jones Industrial Average, albeit with more volatility due to the leverage. In the end, the trend model outperformed DIA, which is the ETF tracking the Dow Jones Industrial Average. Moving on to our volatility trading strategy, the VIX was on a general downtrend despite intermittent spikes which quickly died down. The volatility risk premium model maintained a short volatility positioning throughout and so benefited from this downward drift in VIX. In the end, our volatility trading strategy outperformed S&P 500 for the first half of 2021. Sector rotation was partly dragged down in Q1 by a slight allocation to long-duration US Treasuries, and the lower volatility sectors such as staples and healthcare trailed the hot sectors such as technology, which are heavily weighted in S&P 500. So it underperformed the index in the first half. At the overall portfolio level, our multi-strategy approach generally moved in line with the S&P 500, although lagging behind slightly for the first half of 2021. In summary, it was a good first half for the S&P 500 as it was up 15%. All our strategies were positive, but the outstanding performer was our volatility risk premium model, followed by our trend following model. These two models managed to pull up the laggard performance in risk parity and sector rotation to deliver an overall multi-strategy performance of 11% for the first half of 2021. Okay, that's all for this first half update. Thanks for watching.